Video, we're going to be really showing you what it's like to trade retail versus trading smart money. Without further ado, let's get straight into it. Everybody knows simple retail concepts, and if you don't, let me outline a few of the most basic ones here for you right now. In the first scenario, we have what is called a double bottom. The double bottom is essentially where price taps into the same or about same area 2 times, and essentially retail anticipate it's an important level, and so they want to get back in at that same level and target the high that it came from that level. What that means for us is that right here we have liquidity. That's how smart money are going to see this. They're going to see this as liquidity. Why liquidity? Because they know that retail traders are seeing this as an area that they can buy from, or better yet, when price breaks out, there are retail traders sat there that are seeing this as a breakout and they're going to try and sell from. So there is both different types of liquidity, buy and sell side, on each of the double top variants. If we have the double top down here, one trader is going to have a position open like this with an entry here and a stop loss just below the lows because it's quote unquote protected. The second variant of trader, they're going to have their entries down here for when it breaks out, or entries here, sorry, for when it breaks out, and then their stop losses right here. And so those are the 2 different liquidity inducement variants for the double top, for the double bottom, and of course the same is true then for the double top. And essentially what happens most of the time is that liquidity will get taken like so, right? Price will take it out and induce both positions. First of all, the buyers, they get instant stop losses. Second of all, the breakout traders who open sells and then stop losses just above here, they get tagged into their trades, and then price comes back in to the sells in perfect alignment with the banks and financial institutions. The second variant is the double top, which is essentially the exact same, but on the flip side of things. It's the one high, and then the noise in the middle, and then the second high, and then the push off. And so essentially retail are looking at, okay, price is going to come back here, and we're going to be looking to short. But of course, as smart money traders, we know that this is a high probability area for liquidity, and we know that the BFIs are likely to do something like this. We'll create our double top, which is liquidity. They'll bring price back in, give some sort of reaction, so that reaction induces the sellers, and then more sellers as they market execute. Price will then come up, sweep the liquidity, taking out the stop losses and inducing the buyers, because the buyers are breaking out, expecting that it's a trend breakout, and price will continue to the upside. As price collects both sides of liquidity, price will form a change of character, just like so, and will leave behind a very nice supply level for us to take a short from, playing in alignment with the order flow and expecting the low to be ran, and that will be a very nice trade. And that is the key differentiation between smart money and retail and how they trade double tops. And overall, that's the key differentiation between smart money and retail, is the pure fact that smart money uses retail stop losses as liquidity. Why? Because that's exactly what the banks do. And our job as smart money traders is to get involved where the banks want to get involved, because they allow price to move in the desired direction that we want price to go into. Another variation of liquidity has the same concept but just a different pattern, and that is your trend line liquidity. Now let's say price is making higher low, higher low, higher low. They're expecting it's going to make another higher low and probably another higher high. And so here we have the liquidity area, and what this is stop losses just below, plus your breakout traders who have their sell orders there, and it's going to be the same concept, right? Price is going to take out the liquidity to then take out the stop losses before eventually tapping into some area of supply and continuing its order flow, if order flow, of course, is bearish. And in this case, what you can see is a low gets put in, a complex pullback on the way up, which induces liquidity, the sweep of that liquidity, then the sweep of liquidity in the reverse direction, because price is always building liquidity in both sides of the market. For example, there's a double top here, then it sweeps it into our POI, changes character, and we're allowed to get into the market. So spotting areas of liquidity are vitally important as a smart money trader because they allow us to get into the market and know where to stay out of the market. Now we're going to take these concepts and put them into practical action in the markets. As you can see, we have a chart right here. This chart is GU on the 1 hour time frame. And now let me give you a smart money trader's perception and how the market operates and how to get into a nice position whilst also understanding retail liquidity and using it in our favor. First things first, let's start with order flow. Order flow is the most important concept when it comes to smart money. When it comes to any type of trading, essentially, order flow is vitally important. So we have a swing low, and then we come up, we have a one high, and then we have internal highs, internal lows, and then we have one final high right here that essentially gives the downfall where this breaks, putting in a new lower low. So here is the high that put in a new lower low, and then price puts in a complete low down here. And it's this high that causes this overall low, right? Let's go ahead and get rid of those drawings. I like a clean chart. So with that information, this high right here puts in this low. Order flow is overall bearish, as we can very clearly see. So we're expecting price to continue in its order flow because the BFIs have the clear intention to push price to the downside. Very simple, right? So first things first, let's mark up the supply level, which is right here, that puts in the lowest low. On the way to that supply level, price moves down, and in its process of moving down, we have trend line number 1, which for us is liquidity, double top 2, which is perfect liquidity just before our point of interest. And so let's go through these first two variations first. And then of course, internally also we have our double top right here. Liquidity. There's 3 pieces of retail liquidity that all get used for us to enable our position. The first one, we form a double top, and now this is perfect because liquidity just before a point of interest is very important. Now, why does it work? It works because essentially retail traders, or retail capital more precisely, is holding up a portion of the orders that are available in the market in these positions. So BFIs have to take out those positions, triggering stop losses to be able to remove those orders out of the market so that smart money can get in their orders and move price as fast as they can in their desired direction. There's liquidity area number 1. Another trend line, which of course doesn't hold on its third touch, gives some reaction, induces liquidity, takes out the liquidity, starts building another trend line and a double top. First and foremost, stop losses and sell orders below here, stop losses and buy orders above here. The first one, stop loss, sell orders and stop losses get hit very fast before taking off and taking out the stop losses and buy orders out of this position. Then we come into our point of interest, which you could take a trade straight out of and target the low right down here. Then price reacts from this level down here, pushes down. We already know order flow is bearish, pushes down, puts in a high, internal liquidity, sells off. So this is seen as an area of resistance to retail traders, puts in a low, comes back up to put in this high right here. So this high right here is what? A double top, right? Liquidity. So with this double top right here, you can see that when price taps into this area, it starts selling off, which of course does what? Induces sellers into the market. Let's go down to a 15-minute time frame to better understand where else we have liquidity. So we can see that price came up here once. After it tapped this level, it sold off. It's coming back into this level. Retailer expecting this level will hold its resistance. Once they see price starting coming down from here, they're going to enter positions, or other retail traders are going to put limit orders on, and they're going to be looking to take out these lows down here. On the contrary, you have the retail trendline type of traders who are looking at this and they're looking, no, this is an uptrend, price is trending. When price comes back into here, I'm going to get back into the market. Liquidity. Then you have the other type of traders that are saying like, okay, the smaller trend lines, there's liquidity forming right here and price is an uptrend right here. I'm going to buy from here. So as you can see, there are three different pieces of retail liquidity. And as it stands right now, there are no smart money traders really in the market until we've cleared some piece of liquidity. Price moves towards the area of quote unquote resistance and the double top, inducing more sellers. This candle right here takes out those sellers' stop losses and tags in those buyers' positions. The second one, we start moving away. Then we have a shift of order flow. So after we have a liquidity sweep, we have a shift of order flow, also known as a change of character, where the demand level that puts in the high that clears the liquidity gets broken. And that for us shows us that order flow has shifted, right? Order flow is now beginning to realign. As we start putting in bearish price action, we'll be able to realign with the overall higher time frame order flow and get into the market on this position. So we still have our trend line, and that trend line is still intact. As smart money traders, we're looking to take a trade out of the supply level that just changed character, and we're looking to stay in alignment with the order flow, looking at taking out this weak low down here and also this low down here. This low being the main one because overall order flow is bearish, high, low, lower high, expecting a lower low. As order flow is starting to shift back down, we're expecting that lower low could be put in right now. We have nice liquidity to target on our way back down. We've had a sweep of liquidity. Now we've changed character. Perfect opportunity to get into the market. Retail liquidity number one gets taken and buyer stop losses get triggered. Sellers orders get triggered. Now, where are those seller stop losses? More than likely somewhere up here. Liquidity, and more than likely targeting these lows down here or this trend line here. However they position it, there are many different traders. So those positions have now been tagged. That third candle induces more sellers, those ones that are market executing, because they're seeing the downward momentum, they're expecting price to continue down. Then price reverses, right? And price makes its way up and is approaching their stop losses, triggers their stop losses, tags the smart money traders into perfection, and then starts melting. Second lot of liquidity now as we tap this trend line to perfection and give a nice reaction. What's that doing to retail traders that are watching that? They're thinking that this trend line is perfect. They've finally got a perfect trade. They're taking a long out of here. Stop losses just below the low or even just below this low right here, targeting this high. Such a low risk to reward, which is why retail traders get wrecked, because sometimes, don't get me wrong, these trend lines and stuff work, but the probability of them working are like, 10-20% of the time. And for that reason, their risk to reward ratio, which is 2.4, if you win 1 in every 5 trades, that 2.4 just doesn't cut it, right? You're still net negative. And so that's exactly how the market's designed. If you are on that retail side of the market, you essentially are a target for the banks. If you're on that smart money side of the market, you are trading with the banks with the same understanding that the banks have, right? So continue to play price. It moves them up, induces more buyers when price is going up. And then essentially we're gonna tap again, maybe inducing more buyers before very quickly taking them out. When retailers seeing this and they're seeing prices struggling to go below this level, they're thinking that they've picked a good level, or it is a good level because price is struggling to go through it. And eventually BFIs just say, okay, enough's enough, let's trigger them out, and the price just melts very quickly at some point, right? There we go. And at that point, retail stop losses still probably haven't been hit. They're probably still down here, to be honest. Just playing with them, inducing, and then very fast takes out all of the liquidity and gives us a 7R trade, right? And so you can very clearly see what's just happened and how the differentiation retail versus smart money really works, how it's much better to be on the smart money's side of the market. So guys, thank you for watching. Don't forget to hit that subscribe button if you would like to see more smart money concept trading videos around Forex and cryptocurrency. Don't forget to hit a comment in that comment section down below and recommend what type of videos you would like to see, what currency pairs, what crypto pairs, anything you guys would like to see. Let us know in the comments. We will do our best to fulfill those orders. And anybody interested in learning the skill set and learning how to become a smart money trader, go ahead and hit that link in the description. All of our services, from PDFs and courses and live mentorships, are all linked below in the description. Look forward to seeing you guys soon. Have a good day.